And this is the London session, and we're back into the London rip. One of the other things also I want to show you quickly before the session begins. So one of the things we have to do, one of the things that we basically do in order to get into the market, and it's part again of our preparation work, is when you look at the radar screen now, you can see what we have is called the long point, the short point, the structure long, and the structure short. These are components that you guys can do by hand. You don't need the radar screen to do that. Okay, and this is so in preparation for any trading session that you want to trade, it's important to find out what happened in the previous session. You need to know what happened. If I'm going to trade the New York session like I'm doing now, I need to find out what happened in the Tokyo session. And for that, we use the radar screen, and we try to use it before 8 o'clock, because when the session begins, the radar screen clears. But going through the charts, let's do it by the charts. If you look at the chart for the dollar Swiss, you can see that the dollar has weakened and has really sold off from 105 all the way to 103.71. And I want you to see now on the daily chart that this is the sell-off for the day. The blue line that you see on the daily, this is one of the points we identify as a significant point. And the significant points, they are not, I mean, you can call them, give them another name, support and resistance, but they are not to be studied or viewed in your regular term of support that it stops, and we identify that from the charts, and you can see that this is where it stopped. You see how many times it has stopped over here, how many times it has stopped. So these significant points and structure points we identify every Sunday. So the dollar Swiss has sold off, and if you can look here at the radar screen, this is something that you can do by hand. All what you need is a spreadsheet. We do this as part of our online trade planning session that we do that every Sunday at 7 o'clock London time. And we identify a point where I am going to be a buyer above it, which is the long point. I also identify a point which I am going to be a seller below it. And I identify what we call the structure long, which would indicate to us that I do have a trend change now, or a continuation of a major trend. And I have what's called the structure short, which is the identification of a short or a major short. So looking at this, you can see that we're long the cat from last night, from yesterday, from 103.05. Even though we're long the Swiss, believe it or not, from the 103, we're short the pound yen from yesterday at 134.18. These are all the trade plan that we did yesterday in the Sunday session, as I said. And these you can put on your spreadsheet. You can create a spreadsheet. You don't need the radar screen. And, of course, it helps, but you place your long points and short points, or your trading points. So right now, for example, let's take the dollar Swiss. We take the dollar Swiss. You can see that I have a structure point at the 103.71. So I need to put this here. You put a horizontal line on your intraday chart at the 103.71. You give it the same color. We use the color code to identify strength or weakness. So just by looking at this 10 minutes ago, you can see that the dollar Swiss has sold off and went below the structural point. And right now it came back above that structural point. In this case, you have a no-brainer trade, if you will, an easy trade to buy it from here, to be a buyer right there. because now you're getting, and that is the kind of move that you get after the prices come back above a structure point. So this way, you always put a horizontal line that identifies your long point, your short point. And as I said, we do this every Sunday for all the pairs. So you can come in on Sunday, take a screenshot of my radar screen. You use Snagit or you use whatever you want to use, or write them down on a spreadsheet, and then take these price points and put them by horizontal lines on your day trading chart. And by doing so, the moment you put up an instrument or a currency that you want to trade, you see the line right there. You don't need to think, should I go long? Should I go short? What is the story? Now you know that this is a buy signal and this is something that you want to, or that is your trade, if you will. So quickly, let's look at the yen, because the yen has been the strongest also. So we were planning yesterday that this was our momentum low, and as soon as the prices came below here, sure, I'll be happy to look at the, sure, Ingmar, I'll be happy to do that. So, this is look at this. This was an excellent sell for the yen coming out of Tokyo session. Also, the New York session, it has been extremely weak. Look at these ranges over here. So, just like this, how should we, I will, guys, okay, so I'll do so right here, just let's make a trade plan for the Japanese yen. Right there, the software have identified the momentum low, so we can initiate if the prices come back above the 85.56. That is going to be a buying point in the dollar yen. So the buying point in the dollar yen is 85.56. Abel is saying just now when price went above the structural short, that structural short becomes a long point. Absolutely. You take a reference point, and this reference point, Abel, works on either way. If it was a sell point at one time and now the prices come back above it, it plays the other function on the other way. So whatever was a short signal once, now the prices comes back above it, it becomes a buy signal. Let's look at the pound Swiss. All right. Okay. Right now, the way we are looking at the pound Swiss, Ingmar, is that this is still a short. We do not have. We had a slight buy signal this morning at the 161.70 right there. That was, I will show you that on the chart. That was our buy signal this morning, and it was an initial short covering. So let me show you. You'd see that the 161.70, again, if it was part of the plan yesterday, if you see that line, I will show you, it was a momentum low. That is your 161. I don't wanna keep on running, but you can take it from the daily chart. So right now, we are also above the 162.58, which is another buy signal. And this, guys, this is, Ingmar, this is a very nice setup in the pound Swiss. This is you have a very strong buy, right? Right now it's a buy. It's not a strong buy. It is a buy to buy the pound Swiss. But the real buy in the pound Swiss should be above the 163 right there. But if you can take it from here, then your stop would be right below the buy point from the other day, which is the 162.58. So right here, you're only risking 10 pips on the trade, but I would wait until the market is open, which is another 4 or 5 minutes, and I begin to get my signals on the radar screen. That's why the radar screen is vital for our trading, because as soon as there is movement in a directional movement in the market, it will begin to populate under the signal and tell us what to buy and what is being bought and what is being sold. And the reason we do that, we want to make sure that we're taking the trade in the direction that the market is moving at right now. Okay. Yes, if it gets above the 103, that is basically the continuation to the upside, and you can see the buy signal right here on the daily, Ingmar. But right now, this is a very good. This is what we're having now is short covering. We have sold off, and now we're beginning a short covering, and we have a decent short covering from 160, 173. Right now it's trading at 162.57. You have an approximate 80 pips or 90 pips. That's a good beginning of a very decent short covering move. So we just want to wait until the market populates, and I'm going to put the signal for the radar screen so that we can see it and we begin to. So right here, the signal will, when it begins to populate. The other one that somebody wanted to see was the pound dollar, and I want to share with you something very nice about the pound dollar. Not nice, but in yesterday's trade, we took this trade last night, and I want to. Yes, we should have done that. No. This is the equity. I know it's 8:15 right now. So if you look at the pound dollar, guys, I would show you. Before I even put the chart, I want to share with you something that we did in the planning session last night. You would see that we had a short sell. It is 8 o'clock, guys. What's the anyway? 8 or 8, it doesn't matter. That doesn't require that we. So if we look at the pound dollar, that is now the beauty of the. I talked earlier because we're planning. I'm just chatting. I was in the room. We were chatting on how to plan the trade, and I repeated it again. So take a look here. This was yesterday before Tokyo opened. This was the setup as of Friday. If you look at this kind of a move that we had all of last week, you see that the pound has sold off tremendously, and now we had this close on Friday. And we also have a structure point at 155.33. So let me show you quickly on the radar screen what we had. There is our structure short at 155.33. Our selling point from yesterday is 155.60. So this means what? We are going to go short from yesterday at 155.60, and we're going to see what happens at the 155.33. Either we take profits or we close the trade, or if it goes below the 155.33, we're going to press the short side and take it further. Okay? So looking at this, at the daily chart, you can see it sold off and it went down. I mean, so we took the short below 155.66. This was our short, 155.66. So this is where we took the short below the low, and this is where it came to 155.34, and that was our signal that number one, it just tested the 155.33. And keep in mind something else. I want to say that you do not trade on a precise pip. I mean, I cannot say the 155.33 exactly. No. Yeah, Andy, you were there yesterday when we did that. So this is the short, and right now, as soon as it comes back above the 155.66, you have now your reversal, and it took you to a high of 156.40. So you had about 80 pips on that move, and this is how you can see it on the intraday chart from yesterday. This was the selling point. So right here, as soon as after this selling coming below the 155.66, this is where the short was taken, and you can see the 155.66 right back above here. This is where you say, oops, there is no continuation to the downside. I'm going to reverse, and right here, and that was the move that was taken all the way up into the London session. In London, of course, it reversed and came down. And what you can see now is the volatility in the pound. It's not really directional. I mean, we need some clarity in the move. They really don't know for the time being what to do with the I don't know what a supply zone is, John, to be honest with you. I mean, it's not a term I'm familiar with. So, there is no, okay, top resistance where I'd look to sell. Which is what? 156.15. Okay. Here. No, I mean, that's fine. I mean, if that, I'm sure that is a successful style that you use. And there is nothing wrong with that. I mean, that's what makes a market, John. But that's not the way I trade. Okay. And there is no right way. There is no wrong way. There is a way that, each of us is familiar with doing. I am not in the habit of selling resistance. And I'm not in the habit. No. I'm exactly. Listen, John, that's what makes it a market. Don't apologize at all. This is the beauty of having this chat room, is to have this intellectual discussion. And everybody, again, maybe I can share a point with you and share a point with me. Every day we're all learning from the market. Please, no, there is no apology at all. Why? No, feel free to say anything. All of you feel free to say anything. This is the beauty of the market. There's always a buyer and a seller. No. But my style of trading, or the style that I would like to share with you, again in the room with all, the idea of it's not the point of more. Again, there is selling resistance and buying support. For me, I'm talking about myself now. Okay, has to be done in the context of the market condition. Thanks, Fred. In context with the market condition, John, So right here, as we look at this chart here, what is the market condition, guys? This is a question for everybody here. What is the context? I mean, what is the market condition over here? Just take a look at this. Just for the last couple of days. It is a congestion. It is a sideways pattern. Lovely. Okay? So, in essence, we can all agree that it is a non-trending market condition. Right, guys? Right, John? John G, do you agree? Exactly. In this case, John, then the 156.15 as a resistance is the correct selling point. This is the one condition that I would be looking at trying to take a short. Alright? Why? Because the market is in a congestion. It goes all the way up and it turns around and it comes down. It is a non-exact. Again, I mean, fine if it's okay, I will go fine. So, but in this case also, John, even though with that, this is what we call our daily range. Okay, so even though, oh, come on, let's do it. Even though it is sitting at the 156.15, John, I will still, now you can identify that as a resistance, if you will. For us, the software has also identified, as you can see, the top yellow line, right there, the top of this yellow line. And this is 156.14. So the software has identified to us that the 156.15 or 14 is a level to observe. Okay? And this is the area where the market now is beginning to digest the events of last night. And once we have a break, so if it breaks above the 156.15 now, John, I'm not going to say this is a resistance. I'm going to actually be a buyer above the 115, the 156.15. Somebody had a question here. Sorry, the media question. No, question. Can I go briefly through how I identified the euro was weak? I think I went over this. Okay, I will tell you how. Now, as far as there is two questions: how to identify that the euro is weak, and how to identify the market condition. Now, we don't use. You can use. Again, we don't. I mean, for us, it is not only time. You can use time. You can use 15 or 20 minutes. I mean, that's good enough. But what we use, I want you to see here. I want to show you what we use, which is much more different. You see those little plus signs in here? These are. It is counting, Osama, the number of trades, if you will, that went in on the bid and the ask, and it tells you what is the side of the market if there is buying. You see, they're disconnected. They do not connect. They end at London and they begin at New York. So we're able to find out if there is a buying or selling. Also, you can see that the width, you see the size of this range or the size of this range over here is different from one session to another. So it's not time. We don't use time per se. We use, sometimes they are, let me show you the pound, the dollar yen. Sometimes they are very narrow and sometimes they are very wide. And this is because, look, for example, look here, this is an excellent example. This is New York session. See how big this range is. It is about from 85.50, and the low is 85.35. We got 25 pips right here. This range from this morning, 85.90, and the low 85.87. So that range is about 5 pips. So it is not time. Who was asking that? Usama, it's not time, but again, you can use time. At least it is better than not using anything. Okay. At least you have something that gives you a heads up. So, having said that, let's go to the euro because and you see. Okay, so now let's look at this first. Look at the radar screen. It's beginning to tell us what is happening in the market. I have the dollar yen reversing. I will tell you, Gino, in a second. And you see now it's beginning to flicker, and the signals is telling me, well, the news came out. Okay, what did the news come out, guys? I have 1 minute before the news, but what's the news that came out? If whatever news came out, okay, the Empire Manufacturing is not, I mean, the Empire, this is the New York, I mean, it's for the Empire State, the manufacturing in the New York. It is a fun, but as you can see on the chart, just look at the, exactly, it's approaching the 85.32, and it's holding above the 85.32, exactly. So I'm not really looking at shorting it, and it is holding inside. And the effect of the news was not as bad as the this is these numbers that you see on the radar screen, as Emma count, gives us a reference to the strength or weakness of the currency. Again, the idea about trading is that you need to be able to make your decision at a very high speed. You need to, so right now in the dollar yen, this right here is, it's coming to the 85.32. It is sitting at the 85.33. So if it gets below, I look at immediately at my radar screen. My selling point for the dollar yen was actually from this morning at 85.56. So technically I should have been short from right here, from 85.56 right there. That should have been my short. And I should have been 20 pips already in the money. So that was happened while I was sleeping, but they should have been taken. So right now, if it gets below the 85, then I can take it short. No, the analysis that we do, because we have 3 trading rooms. So we're trading because we got some of our people trade the Tokyo session, some of our people trade the New York session, and some trade London. I mean, I cannot trade 24 hours a day. So we plan our trades like this, and the guys in the, I'm in New York right now, and the guys that are trading London using the same number, these numbers, and they're actually taking the shorts on their platform. We have our trading room. We're setting the trading room in London, and there will be traders there, and they will be sitting, looking at the screens, looking at this radar screen, and they are executing the trades in our offices in London. So this is the trade plan that we do. Yes, we trade. There is a moderator for 2 hours in the beginning of each session. So I would do New York from 8 to 10, or actually we start at 7:30 because we do the preparation like I did with you this morning before the radar screen changes, so we know what happened in the previous session. And then till 10 o'clock New York time, and then the room stays open, but everybody chats. We have a Skype. Yes, these are intraday. We have a Skype network, so all of the guys in the trading room sit and chat with each other. But everybody has this plan. They're looking at the radar screen. This is our plan. This is where we're going to go long. This is where we're going to go short. So it is a simplified way. And then from 8 to 10, and then after that in Tokyo, somebody picks up Tokyo session. Mike Douglas takes Tokyo from 11 o'clock London time till 1 o'clock, the first 2 hours, if somebody wants to trade Tokyo, and then everybody goes to sleep. The room stays open, and then I pick it up from London again, and we do 2 hours. So basically the room is open 24 hours a day, and it is moderated, or we are trading with it the first 2 hours of every session. And then if you have a position, then you can stay with it. All right. So let's see the numbers now. So where are we? So right now, just looking at this, it is sitting at the 85.53. We make profits sometimes. We lose money. We make money. I mean, it's trading, Osama. It's not. Last week, I'll show you the spreadsheet from last week. Hold on a second. This is the trade log from last week. Come on, hold on a second. I'll show you the trade log from last week, from the trades that we did last week in the trade planning session. As soon as it gets up. Okay. Can you see the spreadsheet, guys? Can you see the spreadsheet? Anybody say yes or no? Anybody can see the spreadsheet? Okay. So, for example, all right, okay. Yes, we did this plan last Sunday, and these are the trades that were taken during last week. So, the dollar yen, we had 48 pips in it. The dollar Swiss, we had 120 pips. Again, I'm not showing you, I'm showing this because you asked. I mean, that's not, I'm not doing this as a promo. I mean, this is actually yesterday. Okay, I will refresh the camera. All right, can you see it now? Okay. So these are the trades that our traders took. We planned these trades. Some of, I mean, they didn't take every single one of them because you cannot go long the dollar yen and short the dollar Swiss. Otherwise, you'll be conflicting. But these are the sum total of the trades that was planned in the Sunday of, not yesterday, but the week before. And exactly, yes, everything. And you can see that the pound Swiss, you had 270 pips. The pound yen, 136. The pound dollar, you got 330 pips. Well, that's, again, I'm only showing this because we asked about the plan. So, and I'm not showing you this to promote anything. Okay. So that's exactly the point. Gino, there was no, because you're taking a price point when it breaks above it, your loss is minimal. I mean, there is nothing but a directional move. You only take directional moves. Okay. Yes, you're welcome to join the Sunday session. Anybody is very welcome to attend the Sunday session. All right. All right. Let's go back to our trading. Yeah, it doesn't matter micro loss or standard loss. A trade is a trade, Graz. You can take, again, it doesn't matter. This is why we do it this way. The average of the total trades, if you've taken every single one, that's it. You got 2,000 pips last week. So anyway, and again, what we use is the price action. We use where to go in, and this spreadsheet, this is what I was telling you this morning. You create a spreadsheet like this after you do the Sunday session. You put where you're going to go long, where your short point, your long point, and you enter them. And then when the trade happens in front of your screen, you take the trade and you close it at the next level. Okay? And this is how the guys that don't have the radar screen use the Sunday session, by taking these numbers in. All right? So let's go back to the trade station. Let's see where we are. So look at this. The dollar yen is sitting at the 85.52. It is not moving, so I'm still not ready to short it. Look at this. It's only 3 pips, 4 pips now. It is beginning to break below and it's okay. So I can take a short right now, but keep in mind my stop is right above. This is not very encouraging. I mean, this is not, the screen is black. Okay, that's okay. Okay, I will refresh the screen, not a problem. All right, screen is on again. Okay, so right now it is sitting at the 85.51. There is no real breakthrough to the downside. The only one that has sold off was the dollar Swiss, and this is the one. Now look at this. I'm getting the alarm that is below the 130, 103.71. And now it's coming back to the one. So based on what we see here, guys, I am not really bearish on the dollar, to be honest with you, because all the dollar are now versus the dollar Swiss, the dollar yen, and if you look at the pound dollar, sitting at the 150, they are all sitting at structural points. Okay, so we need to be careful at these structural points. How we're going to, something happened. So the pound has a nice move to the upside. Now, John, this is something I just want to share with you again. Are you there, John? John G? This was our 156.15. Yeah, okay. This is the 156.15, John. And that is why I was sharing with you is, yes, you can identify the point, but our action, this is the point I want to share. You were absolutely 100% correct at identifying the 156.15. Well done. I congratulate you on that. You did it better than the software. Okay? Now, the second part of identifying the point is our flexibility. We need to be flexible. What does that flexibility mean? It means that if you identify a point like the 156.15, John, then, and this is to all of you guys, then we say this. We say, if it gets above the 156.15, I am going to be a buyer. If it turns around and it starts coming down, I will be a seller. So the key is our flexibility. The key is we anticipate the price action. We react to the price action. We do not predict the price action. So we're flexible, we anticipate, and we react, but we do not predict. The chart is black again. How about now? Do you see that? Abel, do you see the chart? Guys, do you see the chart? Yes, okay. So again, we've taken it. So the idea, guys, is the flexibility, and right now you can see that the move from 18 to 38, there is a good 20 pip move. If you're taking one contract, that's the $200. If you just do that once a day, every day, that's a few £1,000s a month, which is not a bad deal at all. All right, so I want to be a buyer of the dollar now. I want to be short I want to be buying the pound, but it is approaching, and so the idea is I'm waiting now. I want a small pullback because I don't want to be buying the uptick. Okay, and if there was really momentum coming into the market, if I would have seen speed coming into the market, I would have jumped in and paid the 156.38. There is no reason why not to buy the uptick if the market is speeding and moving in high speed, because now you don't like now. I'm waiting for a pullback and it's not coming. And now this is the other resistance, guys. Well, I mean to add, I'd have done nothing at a daily preview. Okay, no, that's good. No, listen, John. Please do not take anything I'm saying in any way. I mean, I don't know what the next step. Like right now, I said I wanted to buy the pound, and I'm waiting, and this thing just flew 20 pips. I don't know, like as better than the next one, what the next tick is going to be. Hey, here you go. I don't have a crystal ball. You understand? Exactly. I missed it. Absolutely. That's why I was telling you a minute ago, I don't mind buying the high tick if it's moving. No, I don't use Fibonacci, Graz. I don't use daily pivot. I don't use anything. What I use is what you see, exactly what you see in front of you on the screen. This is what I use. Okay? That's it. I don't need anything to confuse my, No, there isn't. There is just that the dollar is weakening, and that's it. And probably the dollar yen now is below. Look at this. This is now interesting, guys. Hold on. This is a beautiful. Hold on. This is lovely here. This is lovely. Look at this. Look at the pound dollar. This means that the dollar is being sold, right? And and look at the dollar yen. It is still sitting at the 85.34. It has not broken the structure. Okay? So this means what? This means I should be ready to buy the dollar yen. I should be ready to buy the dollar yen, because even though the news came out and all that lovely stuff, we did not break below the... So if I buy it right now, what do I have to lose? What's my loss?
Order filled.
What's my loss? 2 ticks? I've got nothing to lose more than 2 ticks. My loss is right below 85.30. I'm risking 5 pips on that trade. That's it. That's the risk on this trade. And I want to look at the pound dollar. Now, if this starts coming back down, no, I'm not. In the dollar yen, No, I'm not against the trend, Nev. Okay, why I'm not against the trend? This is part of what we do in the Sunday trade planning session. I'll show you in a second. The structure is the 130.70, so I bought it above the structure. That's for the Swiss, yes. If you take a look at the dollar index, this is again part of the work that we do to answer your question, Nev, that I'm taking the trade with or against the trend. When you look at the dollar index, and this is part of our work that we do every day, look at the chart for the dollar index. The structure point in the index was 80.80 from last week. This was our buying point at 80.80. And we are now, as of Friday, we went and put a high of 83.35. So this move down here to 83.43, I do not have, based on this chart, any sell signal on the dollar index. So the position, the general position that we should have in the dollar as a whole is to be looking at buying the dollar. Okay, that's the general stance. The dollar now moved above the structure, so now, which is the 80.80, so the trend now is to the upside. There is buying and accumulation coming into the dollar. What we had was a sell-off last night, which is fine. All right. And this means that the selling that came in last night is a buying opportunity. And the buying opportunity is where it's at or around the structure point. So I have now a structure point in the dollar yen, which is the 85.35 or the 85.32. And it is sitting at it. If it breaks below it, then okay. Oops, I made a mistake. I lost 5 pips. Of course, yes, the market does a lot of stop hunts. Absolutely. This is one of our big trades. But they are not particularly hunting your stop or my stop, John. They are looking at the structure points because the stops are either below or above the structure points. So they are now pushing towards the structure point. And once they do when the prices go through the structure points, they trigger all these stops, John. And now, after that, when the stops are done, they turn around. And that's why you need to always place your stop in the market, not by using a number. You want to put your stop in a technical place. Like what I did right now. My stop is in a technical place. This trade, I was risking, John, do me a favor. Do me a favor, please. Everybody in the room, do me a favor. Everybody in all the lecturer and are excellent people, and I cannot comment on anybody's quotes. Okay, it is not proper and it's not nice. I can only talk about myself, John. So we all have our unique techniques, and they are all successful people. They know what they're doing, and they know how to do what they're doing, and that's how FX Street has chosen them and having them share with you their experiences and insights. But I'm not familiar, okay? And even if I was, it's not proper for me to comment, okay? So if you have any question about any technique, my techniques, I'm more than happy to answer, okay? So, right here, you see, as you see in this trade, all what I said, my stop is, I'm risking 5 pips. And as you can see, it is sitting here. It is not going against me. It's only 1 pip against me. So this means what? This means that there is and understand there is that the market is respecting this price point, and I can stay with that. Now, what's my price target? Again, I am looking what kind of a trade here. I'm sorry, I can't pronounce your name, but take a look at here. What kind of a market conditions? What's this? I want you to describe this in your words. What is this move? What's this move? It's a trending move to the downside. Absolutely, Hassan. Who's making money here? Who made money here? Absolutely, I would buy it again and again and again and again. The sellers, absolutely. So if you're a seller and you want to take profit, what will you do? How do you close your position as a seller? You buy, absolutely. And that buy exactly is going to give us the short covering, guys. And this is the trade that you want to be in. So in this case, who was asking, you don't take profits, you just let them run. Okay. Okay, so it's getting above the 107. Okay, let me take off the rate alert. Okay, I'm sorry, I'm taking off the alert because it's gonna keep on ringing on this in my head. We put alerts on it so we know. And these alerts, the way we have set the alerts, guys, is that it can come to us by email. I mean, I can have it if I'm trading, I can have this sent to me by email, whatever I want. So let me take the alerts off so I can talk with you. Yeah, of course, you put in stops and you put everything, but you want to wait. You just want to wait until your position really gets into profits, and then you trade your stops by putting them in strategic locations. Okay? Of course, Coco. I mean, if you are buying the dollar or you are, that's part. I mean, next time maybe I can share it with you. When you are, I want you to come one day to the Sunday session and see how we plan. How we plan. If I want to buy something, I need to do an intelligence work. I need to do. Look at this. Look at the dollar yen. And I'm teaching. I'm just talking, and it's doing what it's supposed to do. There is no anxiety. There is no fear in what I'm doing. I am not conscious if it goes with me or against me. Yes, it goes by SMS or your mobile or cell phone. 2 pips is 300 pips, 200. It's better than losing 200 pips. So when we're looking, Coco, at buying the dollar or selling the Swiss, or I entered it at the whatever it. Where is it? Should be here. I went in 85.36. I bought it at 36. And it's right above because it came back above the 85.32, and you take the trade. Again, my risk on this trade is the 5 pips, and this is A1. This is a stop, a technical stop. It is not a money stop. It is not, I'm risking 20 pips or 30 pips. It's a technical stop. Because if it comes below the 85.32, I don't want it. So it's 85.37. My stop is below 85.32. I'm risking 5 pips. How far will it go? It should come back at a minimum to the 85.70. Listen to this, guys. I'm risking 5 pips, and my target, it is going to go, and it's not, when I say target, I don't use targets in trading, but it's coming to this market side, the previous market side, which is, let's say, 85.80. So I'm looking to get 50 pips on that trade, and I'm risking 5. So my risk reward is what? If I'm risking 5 and my initial move, expected move is 50, my risk reward is 10 to 1. For every dollar I put in the market, I'm going to make $10. These are the kinds of trades that we need to be involved in. 1-to-1 ratio or 2-to-1 ratio or 3-to-1 ratio is not going to be the trades that pays the rent. Okay? You want to be taking the trades that gives you the 5-to-1, the 6-to-1, the 7-to-1. You always have to be thinking in probabilities. You always have to be thinking about what is the trade that's going to give me the highest reward on my for my trade. Okay? If you look at the dollar Swiss, it is still sitting at the 137, so it's not really, it's not weakening. So now you can have automatic execution. One of the things that we have in here is you can create a workspace. And in that workspace, because as I said, I'm in New York, Osama, so this is not my regular trading computer. So on my regular trading computer, we have what's called an auto workspace, like I'm doing right now. And in the auto workspace, you can have as many charts as possible. So this is, for example, the dollar Swiss. I can put this, the Japanese yen. I can put the, who else? I can put the pound Swiss. Okay. And I can turn the automatic execution of the software automatically, so they can take the trades. A brief percentage figure on my successful trade. I would say about 65 to 70%. But the key, guys, in what we do, number one, is our risk reward is like what you've seen, 7-to-1, 8-to-1, 10-to-1. So even though, let's say, we're averaging 70% on the trade, then you are financially, that's what you want. And that is good enough. Now, any one of you guys who's in London, I see some of you are in England, you can go to the office. I mean, there's no pressure whatsoever. I mean, we don't do that stuff. You can come to the office. They will say, you can do it online. They will give you the workspace online, Nev. So you'll be taking control of their screen like this. If you call James, anybody of you who's in Holland or whatever that wants to test or play with the software, call James, and you can do a desktop sharing, and you can take control of his computer, and you can begin to see, he will share with you, of course you can do it from Lebanon, and he will share with you he will give you one of the rules. Discuss it with James, I don't want to, but basically you can, instead of just watching the screen, you can actually manipulate it and take the screen and actually put the trades yourself and follow some of the rules. Thanks. And okay, and you can put the auto execution on this. All right, so now let's go back to the radar screen and see what else is going on. Well, the dollar. Oh, come on. The dollar is. Let me just share this thing. So the dollar Swiss is sitting like this. I mean, that's, I don't know who took the dollar Swiss, but that's the beauty of the structure point. It is now, you know, that the market is respecting the 103.71, and the longer it stays like this, guys, is this good or bad? The longer it sits at the 103.71 like this, is this good or bad? Come on, guys. Quick. B or A? B or G? Okay. I want you to think like traders. Come on. You're absolutely correct. It is very good. No, it's not going to fall, Sam. This is good because the longer it stays, it's telling you I am not going down, and the ones that are short are getting frustrated. So if you, Osama, take a short here and you think it is going to go down and you sit with it for half an hour and you're not making money, and then you sit with it for another hour and you're not making money, and the longer you sit with it, the more frustrated one will become. So at the end of the day, by the time you said, I'm going to shut down now and I'm going to go and have lunch, okay, you are going to try to get out of the market as soon as possible. So the way you're going to get out is you're going to put market orders, and boom, everybody who was short, who's now scrambling to get out because the market is now, they are ready to end their trading day, then the market is going to explode to the other side. And that's why you keep an eye on these structure points. Now, if the market is trending and it gets to the structure point, I would keep an eye on it. If it doesn't break through it, then I will take my profit. Yes. That's, this is what's called price behavior. And the behavior of the price is not, it's not a term that I say lightly or I'm trying to make it's a I mean, the price is nothing more than your perception. Osama thinks his perception, he wants to go short below the 132, whatever the number is, for whatever reason he has in mind. He perceives that this is a high price, or John thinks, I'm just using names just to remind you, that this is going to be too high a price or a resistance or supply and I'm going to sell it. That's a perception. He perceives that everybody, every one of us, when he takes a trade, he perceives something about the price. If he perceives that the price is low, then he's going to buy. If he perceives that the price is high and it should be coming down, he's going to sell. So the price, the 136, the 103.69 or the 103.71 in the dollar Swiss is meaningless. It doesn't mean anything. Between 60 and 61 or 62 or 63, it absolutely means nothing has changed in the US economy or in the Swiss economy for the 4 or 5 ticks after the market reaches its equilibrium. But what moves it is what we as traders perceive. Is this a good price or a bad price? Now, once we act on our perception, then we want to be validated. We want to be right. We want to make sure that we're on the right side. If we're taking profits and the trade is going our way, we are going to behave now by the behavior of the trader that is making money, and our behavior is going to be to protect our profits. So that's a typical behavior of somebody who is gainful, who is looking to protect his profits. He's going to behave in a specific way. If somebody has taken a trade and it's going against him, then this person's behavior towards his trade is the behavior of somebody that is trying to protect his capital and minimize his losses. So the way he behaves in that sense is completely different from his behavior when he is making money. Do you follow me? Now, these kinds of behaviors you cannot quantify by a moving average. You cannot quantify that by a stochastic. You cannot quantify that by an MACD. What you can quantify and evaluate this behavior is by looking at the chart. Look at this here. If somebody went short over here and he's making money all the way, you know now by looking at this chart that this guy is staying with this trade. He's not looking to take profits, and he is only going to begin to look that this area is nothing more than a pause, and he's looking for a continuation down. Now, having said that, and we're looking at behavior, I think it's graphs. So right there, the prices came down. He's selling it. He's making money all the way. Now it comes in to a pause, which is very normal. Then it breaks below the 103.71, and you and I, Graz, and the gentleman from Netherlands, Ingram, have identified the 103 as a significant point. So right there, how would you behave if you're making money? You would say, okay, this is a structural point. I'm going to put my stop if the prices I'm going to put my stop right above the 103.71. If it gets above it here, I'm going to take my profits. Wouldn't you do that? Absolutely. Because now we are in making money and we want to know where we're going to protect our profits. So if the prices come here, this is the first sign that we are going to protect our profits. So if we have come this morning and we did not take this trade, we are flat right here. We don't have a position, and I want to take a trade, and I look at this and I see that the market is trending down, and all my indicators is telling me sell, 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 sell. But I see now that the price is right above the structure point after a big sell down. This means what? This means that all these guys that are making money, they are going to behave in a specific way. They are going to buy above the 103.71 because they are going to protect their profits. That's the behavior of the moment. So, if that's the behavior, I am going to buy above the 103.71. And thank you very much. You took it from 103.71 to 104.20. You made 50 pips in 10 minutes. That is what trading is all about. And there is no voodoo. There is no secrets. There is no if this turns about this and this is my whatever. Nothing. Simple, logical, explain. Everybody in this room can identify exactly what I have said, and everybody of you can repeat by himself these kinds of trades. As long as you know what to look for in the charts and how to identify the market. Okay? It's sitting right there. I mean, it's sitting at, it hasn't broken yet. I mean, acting right at this point, you have to give it now some time. I mean, if it gets below the one or if it takes out this low, you took it, you're risking 10, 15 pips again, you go short. If it gets above it again. So right now, this is a good solid pause that, again, it's not a bad thing. You want that patience. You want them to stay on that position. The longer it stays there, the better it is. And if you want to get a hint, take a look at the euro dollar and see what the euro dollar is doing. If there is buying coming into the dollar or there is no buying coming into the dollar. Look at this. This is the euro dollar. The euro is also strengthening at and our plan for the euro from yesterday was we are going to go long if it goes, where is the euro dollar? Right there. This is, you see 128.64? See right now? This is our buy point in the euro dollar from yesterday. It is trading now at 166. So it's just getting our buy signal right now in the euro. Right now. This is how we mark our charts. This is, you see that? This is how we mark our charts. So right here, just by looking at the chart, we know that I'm ready to go into looking at buying the euro, or this is a point where we're going to see John if it's going to fail and come down. So every point on the chart we put in. Okay, there is a couple of questions. Abel is saying those sellers covered their positions earlier, so what are they thinking now? No, it's not your psychology is weak. So look at this. Now it's getting above, so this is your buy. You're talking about which pair? I think the dollar Swiss. Once they cover the shorts, you don't need to get fixated on one pair. You don't need to get to say, I'm only going to trade the dollar Swiss, or I'm going to trade you trade anything. If this is not giving you the information that allows you to make a decision, find something else. That's why you have the radar screen. That's why you have, and this is now, for example, look at this. This is 0. This is 97%. This, I can gauge the strength. So the dollar Swiss is the weakest. The dollar CAD is the strongest because it came back all the way. So if I wanted to trade anything in the dollar now, I would be buying the dollar CAD. Then I will be buying the dollar yen. But I will not be buying the dollar Swiss. The dollar Swiss is the weakest of the three pairs of the dollars. The pound dollar is very strong. It's moving against us. It's moving. It's not against us. We don't have a position. It's very strong. Also, the Euro CAD is strong. So the CAD is very weak. I mean, you can look at taking the CAD. The CAD is short. It's very weak. The dollar CAD is strong. So the Canadian is weak. The pound CAD, also the pound is very strong against the pound CAD. And also the Euro CAD is strong. So look at this. Look at the pound CAD. And all of this, we do that by just looking at the radar screen. I mean, I can one glance at the radar screen, I know exactly what I'm going to buy and what I'm going to sell. So again, the dollar Swiss is 136. It's nothing to, it's not a bad trade. You just want to stay with it. All right. It's not yet a sell. Okay, we got another 10 minutes to go, so I'm going to open the session for questions and answers. So if anybody has any question, feel free to ask it, because we got, as I said, we only got 10 minutes, so I don't have the time to start a new topic. So we'll do a Q&A. Yes, I do look at gold. James will put the email address, please. Could you put the email address? This is the gold on the Sunday session. Paul Volcker. That's a lovely name. Paul Volcker. Is this a pseudonym or your real name? Is it your real name? Oh, sure. I'd love to see. Oh, okay. I know he's the former Fed chairman. That's why I said it's a nice name. Here's my email, Osama. Send it to me. I want to see it. Okay, so if you want to look at gold, this is what we do every week. Also on the Sunday session, gold and crude oil are very important for us because they are part of the commodities. Where is my gold chart? So it's now sitting at the 126. It's a lovely trade. Yesterday it was 17, so it's still going up. So that's it. You want to stay with the gold. Well, it went to my stop loss, so I'm gonna take a look at it right now. Who was talking about which next point you have on the loonie? Okay, loonie. This is, yes, I am. There is nothing in the chart that says anything about getting out of gold. I'm gonna look at the Aussie. Okay, just to let you know, I mean, before I put the chart on the Aussie, last week we went short the Aussie at 91.50. I'll show you the spreadsheet. Look at the Aussie dollar. We went short at the 91.15. This is our short point at the 91.15. All right. So absolutely, there are correlations. And this last week we didn't have any losses, Gino. I'm more than happy to show you the losses we have. Right in front of you, there is a loss. We don't have, I mean, there is no, like I said, our average is between 65 and 70 winning trades. But for last week, all the trades that we had were winners, thank God. It's not every week that's the case, but last week was one of them. So join us next week and I'll show you what happened this week. Yes, you take, if you're trading micro or mini, I mean, there isn't much that you can do in, send an email to James, A1. You cannot do what we call a dollar normalization of your portfolio. Okay, if you're trading large money, then you cannot take 10 contracts of euro dollar and 10 contracts of dollar yen. This means that your positions are skewed, because the size of one position is much larger than the size of the other. Okay, but if you're trading mini, then I mean you can't go smaller than a mini, or it's just you cannot really get too much into a dollar normalization of your portfolio. You can just have to accept that you might be over trading in one pair than the other if you're so. I mean, I don't know if that's what you mean, but that's the basically how we. Of course, are you kidding me, Matt? Of course, you get losing days, and there are days that you can't. Nothing gets right, and there are days. I mean, I'll tell you one of the. I'll put this chart. I'll show you the pound Swiss. The pound Swiss. We have a structural point at 169.45. Okay, I'm going to write it here so you don't think I'm putting the charts up that I see. 169.45. These structural points and significant points, we know them by heart. I mean, if I could be sitting on the beach and you can tell me that, yeah, it's still safe, that the pound Swiss has gone above 169.45, immediately I'm a buyer. And but there are some days, let me put the chart for you. And you can see here, do you see the chart? There is the 169.45. You see that? And for example, in this year, right here, look at this. See how many times it went above and it came back. And these are the days you buy it and it doesn't follow through and turns around. And then my style is, if it gets above it, I'll buy it again, and I'll buy it again, and I'll buy it again. This here has given me so much whipsaws, and these are some of the big losing days that we had, Matt. And again, you have to live with it. If I tell you that we have a win-loss ratio of, let's say, 65 or 70%, I'm going to make it 70 so that the math is easy. So this means out of every 100 trades that we take, we are losing on 30 of them, 30. So if anybody tells you I have a winning ratio of 90%, or I have something that was 95%, it might be true, but he's taking two big risks. Once he takes one losing trade, he's going to wipe out his profits. You want something that gives you a statistical edge, something that is working, and it's giving you a good win-loss ratio and a high risk-reward. That's what you want, okay? What is great, but on the pound Swiss you had SL of 5 pips? No, I didn't have 5 pips on the pound Swiss. You can have a technical stop, Graz, okay, depending on every day or on the structure of the chart. You don't put a stop just because, I want to put 5 pips or 10 pips. Each one is different, and you can see on the radar screen, for example, we identify part of our work that we do on Sunday. We identify our stop loss. So for example, in the dollar Swiss, my stop loss is right below the 103.71. So if I'm going to go short below the 103.71, I'm placing my stop right above the 103.71. So in this case, my stop, and this is the spreadsheet that we give to the guys every Sunday when we do our trade planning session on Sunday, that if you go short the pound Swiss, the dollar Swiss, you're risking below the 103.71, you're risking 5 or 10 pips. You're just going to use a very tight stop. But on the other side, if you go long at 138.72, you're going to place your stop below the 103.71. So in this case, your stop is going to be, if you go long, your stop is about 60 pips. But if you go short, your stop is 5. Why? Because our stops, the location of our stops on the chart is technical. It is not money stops. You cannot, I am completely against, and I say that I'm completely against saying that I will only risk on any trades 40 pips. It might be good for the dollar yen, but if you risk 40 pips on the loonie, like Boyke was saying, there's no way you're gonna get stuck, or the pound Swiss or the pound yen. So each pair has its own stop. Okay, what other? We got 2 minutes to go before we end the session. Anybody has any other questions, guys? Osama, send me, I'm curious of what you did. Send me an email, let me know what you... Anybody has any other questions, guys? You close the... No, if you close... I'm still in the dollar yen. You should have waited until I closed it. What's off topic, Grass? No. What's it like on CNBC? What do you mean by that? You just put 5 or 10 pips below. Just give it a little bit of a breathing room. It's not an exact science, Abel. I mean, you cannot put you just have to give it a little bit of a breathing room, okay? You don't use precise, okay? Again, it's 5 pips on the trades. I mean, it's not that you're just giving it the sufficient room it needs. That's all, the breathing room. And the dollar is holding against the CAD. Look at this. When it says 0 like this means that the dollar CAD is flying. See, it's up. It's at the high of the day. So like I was telling you that the CAD is the weakest. Look at this dollar CAD. Just by looking at the radar screen, you can see that the dollar CAD, look at this. Look at this. That's it. So if you wanted to get out of the dollar yen, you can jump into the dollar CAD. Or this means that there is buying coming in. It started with the Canadian dollar, the buying coming in into the CAD. And you just want to be a little bit patient before you get out of the dollar yen. It's still sitting at the stop, so it hasn't really broken. So again, these are all judgment calls. Okay, anybody has any questions, guys? Okay, my pleasure. Yeah, I'm gonna see you in God willing in Barcelona next month. Yeah. Okay, so all right, guys. Thank you very much, and God bless you all, and best of luck. Thank you, Perfect Street, and thank you, Adinda and Vicky. Thank you all.